Now we see the Dow off maybe 1,300 points right before the opening bell. You're down 200 on the S&P. That's still 3.7%. And the Nasdaq holding on to a 4.5% decline. Adam Johnson with me to take out the market for this hour. My fear, I got to say, my fear is that stocks are down and they stay down for a protracted period of time. Is that likely?
That's an understandable fear. I don't think that's actually how it's going to play out. And I'll tell you why, Stuart. Everyone is running the numbers right now, trying to figure out what this actually means. I've read several reports that estimate the impact of tariffs on inflation is only 0.2%, right? So it's not as though this suddenly creates another inflation runaway scenario. Not at all. I think the more apropos question that we all as money managers need to figure out is what's the impact to earnings? And intuitively, Stuart, I think it's somewhere between 2, 3, maybe 4%.
Down.
Yes.
Less than we expected.
Yeah. And I'll tell you why. As ugly as these tariffs sound superficially, they're going to get spread around. In other words, U.S. companies that rely on imports will squeeze the overseas suppliers. So you got to help me out on price. They're going to say, how much can we pass along to our clients? Hey, what can we do in our business to lower our costs, to offset? So CFOs right now are getting very creative. They're sharpening their pencils, and they're trying to figure out how to bear the brunt of this. And I think that's ultimately why it's only a single-digit impact to earnings, and we will be able to get through that. The immediate reaction right now is emotional. Sell everything.
But if you've got any impact on profits, and profits are the bottom line for stock prices, if you have any impact down 3 or 4% from what was expected, stock valuations will come down by that amount. So you're not going to go straight back up to new highs. That's not going to happen.
But guess what? We were already on the NASDAQ. I tend to look at the NASDAQ because I'm a growth investor. The NASDAQ was already down 16% yesterday. Given what we're showing people on the screen for futures, it's down another 4, maybe 5%. So the NASDAQ has corrected 20%, which tells me that we've already more than discounted what we need to, given what's happening. Stocks are already down 20%. They're not going to fall another 20%. Are we going to fall 40% because of this? No, we're not. Okay. So people are going to run the numbers and figure out what the real impact is.
We will see what those numbers come out.
And I think those numbers are single digit, low single digits to earnings, Stuart, which is why I know I always say, oh, you always buy the dip. This is a lot more than a dip. But I do have new money coming in today, and I will be buying.
Today?
Yes.
Okay.
I will be.
Stay with me for the hour, please.